Dr. Anna and her team are working on is going to push Daisy and really impact the world in the way that we have always dreamed. And so, in life, great things often take time, often have challenges that are unexpected, often require very tough skin, very big focus, because if it's worth doing, it's worth doing right. And if it's a big enough idea, it's worth going through all of those challenges. And Edward, I couldn't agree more with what you said. Knowing what's happening and seeing what the community is not yet able to see, when that manifests, when that comes true, we promise you there's going to be incredible celebration going on, and it's going to be an incredible victory together. It's another reason why I'm just telling you now, book your tickets for the Dubai event, because when we show the world the results at that Dubai event and what is coming next, Data is going to be the biggest project in our industry and in the world, because of the performance and the results that this AI team is bringing to the table. So get ready. I know you've heard us talk about it for a while now, but we're just telling you the promise is real. The delivery of that promise is soon, and we're going to see some exciting things. So Dr. Anna, let's throw it over to you to share with us some updates from your end on what's happening in Endotech world.
Yeah, thank you so much, guys, for the intro. And I want to talk a little bit first, not about the version, but about what's going on in the market and generally with us, and maybe even general with me. First of all, you know that the bearish market that was since November really hit the industry by several bankruptcies, lots of money lost and stolen. And the reason is that many companies that are in the space got overly excited about the bullish moves. We are, by the way, one of them that we put too much of the portfolio on the bullish side, and we didn't switch it to the bearish side. But we need to admit that we were very careful with risk controls. That's why it didn't hurt us in the way that it hurt other companies that went with leverage and went with loans and went with over kind of hoping for the continuous bullish moves. So we saw huge companies, hedge funds, other companies that literally went to bankruptcy during these bearish moves. So can I see the other slide? The next one. And what I wanted to talk about is the big thing that we were dreaming to do at the beginning of the project and how it's going right now, and the fact that version 2.0 it's everything that we wanted to happen, but we still to give several pushes to get to the point where we need to be with the performance. So first of all, in very simple terms, what we had at the beginning of the project is a statistical observation of the markets that in high volatility worlds that we have high opportunity, but also high risk, high reward, the best opportunity is to go with trend. And it happens with many other markets as well. When they're still young, when they're in the very active phase, the trends are your friends and you can ride it. And if statistically it's a good idea. So the way we would ride it is to hunt for the beginning of the trend, to join it with buy, and then to look for the end of the trend and to exit it with sell. And it was working for both algos that are able to do long and short. Now, one of our mistakes was that we did not kind of symmetrically put buy and sell signals in our portfolios, and even that we had sell signals, we didn't follow them with the full capital, with full 50% of our capital. So the version 2.0 is the version which helps us to be more like one of the reasons that people do not go with the short side is not because it's not symmetrical or it's some emotional. Just the short side is very aggressive. It has more volatility. It goes, we call it like throwing knives. It's really, really aggressive phase. So until you are very successful with doing that, usually you're trying to stay away from going short, because again, if you miss it a little bit, you might hurt yourself, or you might hurt the risk and the results. So the can I go to the next version? Yeah. So the version that we were struggling to get, 2.0, that were released a few months ago, is basically the version that prepared our AI technology to be much more precise with the markets that we work with. There is certain approaches in institutional markets, institutional quant teams, that what you need to do is you need first to model the market and then model your strategies. So instead of just creating very smart strategies, that's whatever you want, you first trying to model what's going on with the market. So for this, for example, medallion funds, they had 8 different states of the market that they were predicting, and then within this market states, they were doing the trades. So on the chart, what you can see here is that every single segment of the market is different segment. You can see this kind of uniformity within the state. For example, in the middle, you have the hills going up and down in fairly similar fashion. And then you have the trend that goes also with similar amplitude and the speed. So each state has its own definition of the noise, of the size, of the length, and so on. So when we are able to predict the states and to basically understand the states in the market, we can now start using different methodologies for AI to try to optimize the results. So this major change of AI was done in 2.0, where we switched over tools from predicting the strategies to predicting and trades, to predicting first the market states, and then having lots of tools, lots of possibilities of how to capture this opportunity within each market state. And then this fun part started, as Edward and Jeremy said. We have now really big team of experts, of AI specialists, of quants that are working on creating this micro pattern identification that helps us to try different tools on different states to improve it. Now, it's quite complicated. Even that you see it with your eye, that it's quite simple, it's quite complicated. And here I wanted to share something personal. As you know, some of the leaders is kind of comparing us to the Tesla, and me personally to Elon Musk. And finally, this week, I decided to listen to the latest interview of Elon. And I was quite surprised that their challenges with AI, with creating auto driver, is very similar to what we have. And their journey is kind of very similar to what we have, even that they are in computer vision world and we are in Fintech. So the main thing is that when you approach such a heavy task that has such a level of details and such a level of unpredictability, you always go with feeling that you're already there, because you envision the solution, and then it looks like the logarithmic curve that you really creating lots of tools, it's working, and then you're feeling that you're always there, almost there, till you reach the tipping point where you understand that you didn't pay attention to something, and something new comes into your attention, some level of additional complexity that works out. That's why for the last few years he was predicting to finalize the new car, the new automated driver, and it was running away from them. It was escaping from the solution. In our case, again, we are at very final step, And when he was asked to explain why he thinks this way, he gave certain explanation. I would like to give my explanation why we think it's a final step, why it should work after we complete this week or even couple of weeks of work to reach this level of complexity that should finalize the efforts. And here I come to other examples, like Medallion Fund that did 8 states, survived till this year. And it was enough for them to capitalize on the results. The results that we see right now, again, we're still fighting through the final points, but we see the accuracy rate, we see the improvements with each step that we add in. It's very important to mention that it's not that our previous result didn't work out. We have and still had our strategies that working. It's just they're not reaching the same level of stability that we really need in order to say that we succeeded. So I would like to show you examples of the last 2 weeks and the next week that we're having in order to finalize some last points of the results. So for example, version 17 that's right now in production, can I see the next slide? It's basically talking about the fact that when we are at the reversal stage, we cannot reverse at each point because many times you are at very much at the noise level, and you need the reversal points that are correlated with your resistance and support lines. But then the question is whether you use static parameters or when to enter at the band of the resistance support, or you use dynamic parameters that connected to ATR and other elements that are talking about current situation with the market. And if before we were happy with the static parameters, now we understood that we need to introduce additional level of normalization. And the reason is because we didn't catch the final signal. So we had to go back to the drawing board and to figure out what went wrong and how we can improve it. And apparently certain elements, certain parameters were not dynamic enough with market states. So we improved this part, and the 992 resistance support line that was not materialized for us in Daisy in previous months. Now we are catching every time that we have resistance support reversals. So this version happened last week. We already have it in production, and we kind of covered this issue to making parameters dynamic. So can I see the next slide? So this is example of the current version that we're finalizing is additional tools to work on market states, right? So what you can see here is there are multiple ways that you can catch opportunities within the market states. Even that you see it clearly within the market state, the question is, how do you capture it? You can use, for example, extreme abnormalities of the market with RSI. You can see it with different indicators to decide when to enter and to exit. And we are literally having AI system that testing different in different combinations, each and every one of them, and trying to figure out what is the right approach to each market state. And again, you need to be very dynamic with the market, because market, even during the last months, we saw that the microstructures of the market started to change. So you need to be very dynamic in order not to compete efficiently with the rest of the players. So again, the market states and different approach within the market states is what's tested right now. And the final point, which we hope will help us to close this level of complexity that we were struggling to get. Can I get the next slide? Yes, it's the level of dynamic resistance support lines that are also created by, linear regression, pitchforks, different logarithmic curves, different pattern recognitions that we have. This is just an example of one of the things that we currently have in our state is a typical pitchfork that you can see work beautifully and gives you very clear signals of what needs to be done, the entries and exits with greens and with reds. So kind of this level of prediction is very exciting. And again, for each state and for each element, we have different forms that are showing the market. Again, Fourier and everything that you have on the list is currently in the system. So as I said, we have very high level of micro-analysis of the states. We're having prediction elements for the market states themselves. And all this new approach is a very heavy lifting that we hope we already completed. So we will see very shortly whether this approach helps us to cross the line of moving the accuracy from level of 20 to level of 40 and up, and having our signals in very high winning rate. So that's kind of, I know that it's lots of terminology that I used, but in short, we had one approach that was working for us. We still have this approach working for us, but it's not enough because it's not fulfilling our need for 200, 300% a year of the returns with the stability that we're looking for. And I believe that once we get there, we will be, as Edward and Jeremy said, we will be not approachable by any other firm that is working currently. Plus, it's not only crypto. Any emerging market that we will be approaching is basically the same story. And to summarize, it's also the story of the Ethereum, which is very, very exciting for us, because we, as a company at Endotech, we are strong believers in Ethereum. We think that blockchain, and specifically Ethereum, is the future. So having all the negative sides of the world, of the crypto world, we are still very much excited and believing in the future of crypto. We are very much believing that it brings, everything that it's talked about decentralization, about the trust, about the future of the blockchain. So Ethereum, by doing this step for us, it's another milestone for us that we are in the right market, we bet on the right market, and we need to push forward to extract these opportunities in correct way. So thank you.